Welcome to another S&P 500 analysis. This is the weekly edition. So far, the start of July has not lived up to the positive seasonality expectation for the S&P 500. Although it is only 1 week, but the price action has been negative. Will this be one of those occurrences that July is not a strong month? After all, seasonality doesn't mean it's a guarantee. It just means most of the time it's a strong month. In this video, we'll look at the price action of the S&P 500 and the other major market indexes along with the market sentiment, market internals, and see what they are telling us. In addition, we'll also look at the yield curve, the 10-year yield, the US dollar, oil, silver, and gold, and see where these markets headed. Then finally, we'll look at the diamond, spider, the QQQ, the IWM to see where the market is pricing in for these ETF for the coming week. Stay tuned. Let's take a look at the indexes. The Dow Jones Transportation was the strongest performer last week. It's the only index that actually closed out the week with a small gain. It gained almost 30 points, or 0.19%, and the Dow Jones Industrial is the weakest index for the week. It lost almost 2% over 670 points. The Nasdaq 100 lost 142 points, or close to 1%. So did the S&P 500, lost 51 points, or 1.16%. The Russell 2000 lost 24.1.27%. For year to date, the Nasdaq is still holding the top two spot, with the Nasdaq 100 still holding a 37.5% gain, and the Nasdaq Composite 30.5% gain. The transportation is actually up 16%, while the S&P 500 is 14.5% positive, with the Russell 2000 close to 6% gain for the year to date, and the New York Composite 3.25%, and the Dow Jones Industrial 1.75%. And look at this weekly chart of the S&P 500. We notice that the weekly candle was a bearish inside bar, and the range was only 71 points because it's a shortened week. We have the half day on Tuesday, and then on Wednesday is 4th of July holiday. And it gained 51.1.16%, and still closing above this rising 10 and 40 week moving average and doing a one-time framing up. It is forming a series of higher high and higher low. Now let's take a look at the sectors in the S&P 500. We see that the real estate was the top performer for the past week, with a gain of 0.27% or 10 cents or 0.1. So it's a modest gain, but nevertheless it is in the green, and that is the only sector that was in the green for the past week. And you can see that it is gaining a little bit relative performance over the S&P 500. But it is still inside of this range between 38.84 and 35.85. So we'll see would it be able to come up to this 39 level and try to break out from this this balance area here. And the communication is also holding up. It's not making much of a progress, but it's kind of holding near the 52-week high, and the relative strength comparing to the S&P 500 is pretty much flat. Now, utility came up a little bit last week in terms of the performance, and it's in the top 3 on the top of the list here, but the relative strength is still near the low. So it's kind of just holding up and chopping around near this 65 area. In the consumer discretionary, you can see that it is still outperforming the S&P 500 on a relative strength basis, and see that it is holding up near the high. And here's the financial. Financial is holding above this 33 level. Now, they are due to report earnings soon, so we'll see will this push the financial on the upside or bring it back into the zone. But it is gaining a little bit of a relative performance over the S&P 500 in a recent week. And for the energy, it's still kind of flat, so it's holding at this 78.5 level. So we'll see if it could hold this level. We could see a push up to this 87, this top of this balance area. Now, if we break below the 78, we could see it come back down and possibly test this 69, 70 area once again. And the consumer stable is relatively weak. You can see that the relative strength comparing to the S&P 500 is near the low here, but the price action seems to be holding pretty flat between the 75 and 73 area. And for the industrial, it is kind of holding flat up here, although it came off the low in terms of the relative strength. And it is above this 104 area. So we'll see when it comes down and tests this 104 or pushes into a new 52-week high. And here's the technology. Technology is holding flat last week, and seems like it's making a little bit of a lower high here, but we're also seeing a higher low. So this could setting up a little bit of a pennant, and we'll be watching this. Is it going to break below or break above this little bit of a pennant or a triangle? So we'll be watching to see how the technology is going to perform in the coming week. And here's the material. Material still down here near the low here in terms of the relative strength, but it is holding this price level around this 80, 81 area. And the healthcare is relatively weak. You can see from this relative strength chart here, it is making a new low. And the price is also start coming down, dip down to 129. So be watching to see this area here about 126, 125 area and see what it come down and take out this low here. Now let's take a look at the sentiment. Here we see the market participant is still being complacent, although it came up a little bit on the VIX. Remember last week we were looking at somewhere around the 13 level. Right now it's coming up close to the 15 level, but still the market participant are still pretty complacent. And also the put call ratio came back down and it's sitting at 0.69, so they are still risk on. And here looking at the up-down volume ratio, it's kind of interesting here. On Thursday, we have a sell-off. So the down volume was in favor of the up volume. But on Friday, we actually got a reversal during midday, and the market actually ended down. But look at the up-down volume ratio. It's almost 3-to-1 in favor of the up volume. Similarly, looking at the daily advanced decline, we have 1,289 more advancing issue than declining issue. So we are seeing a little bit of a positive divergence on Friday sell-off, or the Friday reversal, late afternoon reversal. And also we noticed there were 32 more new 52-week high than 52-week low on Friday. And here looking at the cumulative advanced decline line, we are still seeing a negative divergence, but the cumulative AD line is making a little bit of a progress trying to come up and resolve it on the upside. So we'll see will it be able to come up and take out these high here. And looking at the NASDAQ up-down volume ratio also show a similar characteristic as the New York Stock Exchange. We did see a positive divergence on Friday with 1.76 in favor of the up volume. And also the advancing issue outnumbered the declining issue by 1,243. Now the new high, new low, although there were 9 more new 52-week low than 52-week high, but we are not seeing a expansion of the new low. So, but we did see quite a number of more new 52-week low on Thursday sell-off. But still, it is relatively minute when it just kind of hovering around this neutral line at 0. Now we are still monitoring this huge negative divergence between the cumulative AD line and the index. We're still waiting for the resolution of this negative divergence. And looking at this yield curve here, the 10 versus 2, we see it came down almost to this low here and then got to bounce back up, sitting at 0.88 minus 0.88. But nevertheless, it is still pointing to the level that we are getting a recession. And here looking at the yield, remember we were talking about it coming back up to this 3.9 and work itself up to this 4.1% or so. So right now it came in on the tag this 4.1 area last Friday, and right now we are going to keep an eye on it to see what it come up, break above that and come up to this 4.25% level. And here's the dollar. The dollar came down on Friday. Now that's kind of a little bit of a correlation, reverse correlation, a negative correlation to the S&P 500. Normally people will be looking at a strong dollar, negative market. And a weak dollar, we get a strong market. But on Friday, we seen the S&P 500 and the rest of the market came down along with the US dollar. So right now, we're still looking at the dollar possibly trying to come down and retest this 101 level. Unless it could break above this 104 area, then we could see it move up here at this 106 And here's the future on the dollar. You can see this volume profile. It broke below this low volume zone here. And now it's getting down to this lower portion of this balance area and working toward the composite point of control. So if it dipped below the composite point of control, then I'd be watching for it to come down to this 101 area. And if it stay above and get back in to this top balance area, then we could see the dollar possibly work itself back up to this high volume node here near the 104 area. And for crude oil, remember we were saying that as long as it could hold this trend line, then we could see oil maybe getting a little bit bounced and try to come up to this 83 area. Right now, it came back up and got above this 71. Last week, it closed near the 74 area at 73.86. So we'll be watching to see would it come up to this 83.39. That's basically we're watching the auction back up to the top of this balance area here. And here we're looking at silver. Remember we're talking about this bear flag here, and we got a major move down here somewhere around 22. Now we do have a fractal here, bear flag within a bear flag. And the major move of this bear flag at an 80% level is somewhere around 21.86, which is in confluence with this 80% level here with this major, the bigger bear flag. So we'll be watching this 22 level next week to see the price come down and tag this level and see would it get a bounce here or would it come down to this 21.55 at this trend line, also this particular support area. And gold got a bounce off of this 1900 level a week ago, but then it tried to get above this 1937 area. You can see that it encountered resistance here. See that there have been support and then broke this support, and now it's multiple try to get back up above this essentially 1940 area, and it has failed to be able to get above this 1940. So we'll be keeping an eye on gold for the coming week to see what it finally get a push back up and get above this 1940 and possibly push up to this 2000 level. Now, if it is unable to get this 1940 and get rejected again, then look for this 1900 again, get retested and possibly come down to this 1890 area. Now let's take a look at the indexes, starting with the S&P 500. Last week, we noticed that after the 4th of July, came in with a gap down and finished with a hangman type of a doji. Then on Friday, we sort of have a little bit of a rally up and then kind of faded in the afternoon and finished the day with a gravestone doji. So that is quite bearish. And also notice that here on this cluster of candles here, it is actually forming a evening star type of pattern. So this little bit of a gap down was probably not surprising if we recognize this evening star type of pattern. Now for the coming week, we'd be watching the price action to see would it be able to come back up and take out this high and put in a new 52-week high, or would it continue to come down and test this 43.25 area. So you can see from last week, we saw the index actually close right inside of the lower range of the expected move. Then for the coming week, we'll be looking at these ranges here. The upper range will be between 44.67.5 and 44.52. And here is the lower range is 43.45.50 and 43.32.50. So those are the ranges that we are looking at for the coming week. And as you can see, the upper range is actually priced in to be above the 52-week high. And the lower range is coming back down to possibly test this low here near the 43.25. And for the Nasdaq 100, we also noticed the gap down here on for the day after 4th of July. And then on Friday, we also saw a little bit of a hangman doji, a little bit more of a inverted hammer. Nevertheless, it is a bearish type of candle. Now for the coming week, we'd be looking at this range up here at 15,380 and 15,298.90. And notice that the upper range is also priced in above the 52-week high. So if it could get into this upper range, then we'd be looking at a new 52-week high. But on the lower range is between 14,774 and 14,725 or 26 area here. So if it come down to the lower range, then it'd be coming back down to test this low here and see what it put in a lower low. If it does put in a lower low, then watch below here. There is a gap down here. It could be working toward this 14,000 level and possibly come down, fill this gap, or test this trend line. So keep an eye on that, this lower range to see would it be able to hold above this 14,700 area. If it is unable to hold above this 14,700 level, then we could see the NASDAQ probably starting a pullback a little bit more substantial than the recent pullback. So keep an eye on that 14,700 area. And for the Russell 2000, we did see the Russell 2000 put in a lower high here, but it is holding above this low here at this 1820 area. So we'll see would it be able to hold above this 1820 and possibly come back up and take out this 1906. But if it come down and break this 1820, then we'll be watching for it to continue to move down here and possibly try to fill this gap down here near the 1782 area. And looking at the transportation, the Dow Jones Transportation, it came up and tests above this 15,650 area, basically this pivot high here, and then came back down. But although it came back down, but it still finished positive on Friday. So that's an encouraging sign for the Dow Jones Transportation. So for the coming week, we're going to see would it be able to come back up once again, get above this 15,650 and possibly come up toward this pivot high here at 15,888. Now, if it continue to move downward, then if it break below this 15,320 area, then we'll be watching to see would it start retracing back down from this balance area here and start working its way back down to this 14,637. Looking at the Dow Jones Industrial, we see that the Dow Jones Industrial did not come up and fill this gap like the S&P 500 and also the NASDAQ 100. They both came up and filled this gap here. Now the Dow Jones Industrial did not, and it came back down inside of this wedge. Remember, we were talking about breaking out of this wedge and try to get back up above the 34,400 area. Well, it did come up and stay there a couple of days, then it came back down. So right now, we are looking for the possibility of coming down to this level here at 33,273 and try to fill this gap and see would it be able to find support here near this trend line and also this gap area. And if it doesn't, then we are looking for the Dow Jones Industrial to continue to move downward toward this 32,567 area. Now, if it could get back up above this 34,277, fill this gap and take out this high, then we could see it possible move up toward this 34,600. Looking at the New York Stock Exchange Composite, we see that it also did not fill this gap here, although it made an attempt, but it did not completely fill this gap. So right now, it is underneath this 15,710 area, this pivot high. So if it's unable to get back above this pivot high and come up and fill this gap and move up to this 15,969, then we'll be watching for it to come down to see would it be able to find support here at 15,441. If it doesn't, then we'll watch the gap level down here at 15,174 as a next potential test of support here. Now let's take a look at the ETF for the indexes, starting with the diamond, the ETF for the Dow Jones Industrial. As you can see, the price is below this composite point of control here, and it is still bouncing inside of this balance area. So right now we are watching to see would it be able to get back above the composite point of control. And zooming in on this chart here, we notice that the price action here, still left this gap unfilled. And this is what happened last week. It closed below the weekly range here and closed below the composite point of control. And for the coming week, we'll be looking at the possibility of having the gap fill up here or the gap fill down here. See, the market is pricing in the upper range between 342.60 and 341.40, and that is right inside of this gap here. So if it come up and tag the upper range, then most likely we get this gap fill. But if it come down to the lower range, which is the market is pricing in between 333.40 and 332.50, then it be filling in this gap down here and possibly come down and test this trend line for potential support. And looking at the SPY here on this chart, we see that the price inside of this balance area. So the level that we are keeping an eye on is this 450.34. That's this upper edge of this balance area, or the 426.14, and that would be this edge here, this ledge down here in this balance area. And zooming in on the price action here, we notice that the price closed right inside of this lower range on Friday after a afternoon reversal. So right now we are basically still watching this 435.48. And here are the ranges for the coming week. These the upper range is 445.50 and 444, and the lower range is between 433.10 and 432. So once again, it is basically pricing in a 52-week high if it come up to the upper range, and if break the upper range, then keep an eye on this 450. But if it continue to move down and get below this 435.48, then we'll be watching this lower range, and that could put in a lower low. Then we'll be watching it come down to this 426.14. Then once it breaks this level, then this gap could be in play. Remember, we're talking about this little small balance area here, this 429 area here, this 429.50. So watch this level. Once you get into here, then we could easily see it chop around and come down to this 426. And look at the QQQ, the ETF for the NASDAQ 100. You can see that it is inside of this balance area and sitting right above this level at 366, 367 area. And we see last week it closed between the inside the weekly range here. So sitting right here at this 367. So we'll see in the coming weeks to see would it be able to get up and put in a new 52-week high. And here are the ranges for the coming week. 374.80 and 372.70 is the upper range, and 359.80 and 358.30 is the lower range. So the market is pricing in, if it come up to the upper range, then it'd be a new 52-week high. And if come down to the low range, then it'd be testing this low here to see what it put in a lower low. If it does, then we'd be watching it move down toward the 338.50 area and see what it come down and fill this gap, and also basically come down and test for potential support from this trend line. And look at the IWM, the ETF for the Russell 2000, we see that the price is still at this upper portion of this balance area here. So the key thing to watch is this 189.90 or the 190 level. If you could get above this 190 level, then look for a possibility of either getting rejected back down or break above it and move up to this 195, and that will come up to this trend line here for a possible test of resistance. Now, if it doesn't or is unable to come up to this 190 level and break below this 183.38, then look for a move down to this edge over here near the 179 area and possibly come down and fill this gap, then start auctioning down toward this lower portion of the balance area. And we notice that the price actually closed back inside of the weekly range last week on Friday. It was below the lower range, but on Friday it got a little bit of a rally and push up, fill this gap, and close just above the lower range of the expected move. And here the range for the coming week. The upper range is 189.60 and 188.40, and the lower range is between 181.10 and 180.40. So we are looking at the price for the possibility of coming up to put in a higher high and come back up and try to get above this 190 level and possibly push up toward this 190, 150. Now, if it doesn't move up to the upper range and instead break below this 183.38, then look for this lower range to get tagged and possibly come down and take out this low. Then we'd be putting in a lower low and look for this gap to be in play near the 176 area. So as you can see from the first week of July, it did not start out on a positive tone here, such as like a lot of people talking about the seasonality. July could be a strong month, or typically July is a strong month. So again, the key word is typically. It doesn't guarantee that it will be. So who knows, right? It could have one of those instances that the July turn out to be a bad month, not as strong as seasonality say that most of the time July is a strong month. So right now we are noticing there have been some negative or bearish price action for the first week of July. We know the market is pricing in for another rate hike from the Fed, but the Fed been telling us that for months now that it's going to increase rate further and it's going to hold the high rate longer. So I don't understand why the market find it so surprising and saying right now, oh, we're going to see a more high interest rate hike from the Fed. So I think the July FOMC meeting is pretty much baked in for another 0.25% hike. So right now we are looking at this price action here. We see a lot of trap long here on Friday. So we could see a little bit more downside next week and shake out these long and possibly sucker some more short to come in before we reverse and then trap those short, and then we'll see would it be able to come up and take out another 52-week high and come up to this 4,500 level, because I think that will be the next key upside level to keep an eye on is that 4,500 area. Now on the downside, we could come back down and test this low, and if it take out this low, then I think it will spook a lot of the market participants that been so complacent, based on the VIX, that been so complacent, and maybe will spook some of those weaker hands out of the market, then we get another push up or come down and fill this gap. So I hope you find this video informative and educational, and smash the thumbs up to give it a like. If you are new to this channel, be sure to subscribe by clicking that subscribe button. Thank you for watching and stay safe.